Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Monday, January 26, 2009. The week started with a return to risk appetite, with the yen and dollar falling as European equity markets saw a strong surge, mainly as a result of the announcement by the bank Barclays that it does not need further capital increases. The pound-yen pair, a good barometer of carry trade and risk appetite, rose 470 pips from its intraday low near 119.70. Just on Friday, we saw the pair hit a new record low, so today's action may just be a retracement from a technical point of view. The euro-dollar pair surged almost 300 pips from its intraday low near 1.2860 to reach 1.3180. That breaches the resistance levels from last week as the appeal of the US dollar as a safe haven eased today. In a more long-term look, we can see that today's move also breaks an important downward sloping line of resistance that has held for the last month and a half. It remains to be seen if this means we get a more sustained euro rally or if this is a false breakout, and a lot will depend on how stock markets around the world and investor sentiment holds up this week. The euro-pound pair fell in favor of the pound in European trading after hitting a new high at 0.9520, which was resistance from the end of 2008. The pair then fell to test 0.9340, which was Friday's low, and rebounded from there. The euro has surged 600 pips in a rally that began on January 16th, but of late that rally is looking labored, and we may be seeing signs of a reversal ahead. In fundamental news, the UK saw its level of mortgage approvals increase to 22.1 thousand, a solid rebound from the record low amount in November. Mortgage lending remained the same at £2.9 billion. The report from the British Bankers Association also showed that consumer credit was very weak in December as people reined in their credit card spending. In the US, existing home sales surprised forecasts and increased 6.5% to an annual rate of 4.74 million. The increase in sales was a result of plunging prices, which helped get some potential buyers off the sidelines. Also, mortgage rates have dropped to very low levels as a result of the low interest rate in the US and government attempts to restabilize the housing market. The U.S. Conference Board Leading Index, which measures the direction of the economy over the next 3 to 6 months, rose 0.3%, surprising expectations. It was the first increase in the index in the last 6 months. The main reason for the rise was a very large positive contribution from the real money supply, which masks the declines in building permits, the average work week, supplier deliveries, and initial unemployment claims. The dollar-yen pair rose today in favor of the greenback as U.S. stocks followed those in Europe and traded in the green for the morning, though dipped back to neutral territory in the early afternoon. Several U.S. companies, including Caterpillar, Pfizer, Sprint, and Home Depot, all said they were ready to cut more jobs. The pair eased off its high after it came against resistance and is now in a triangle consolidation phase. The lines of support and resistance are coming together, so there should be a decision soon as to which direction the pair will go, though as always we could have further sideways trading as this is only a short-term pattern. In a final pair for today, we look at the US dollar Canadian dollar, which fell for the 4th straight session, testing the level around 1.2140. That level is a 61.8% retracement of the run-up in the greenback seen between January 9th and January 20th. The loonie was helped by the burst of risk appetite and a rise in crude oil to $48.50 a barrel. Taking a look at upcoming releases for the next session, Japan will post its Corporate Service Price Index and the Bank of Japan meeting minutes. Australia releases data on business confidence and producer prices. Overnight, Switzerland will unveil its consumption indicator, Germany will post its import prices and the IFO Business Climate Index, the Eurozone releases its current account, and the UK posts a measure of its retail sector. Tomorrow from the US, we get data on housing prices, consumer confidence, and the Richmond Fed Index. And that wraps up today's market action. Thank you for joining us here at CMSFX.com, and happy trading.